TSMC does not report an AI revenue line, but its second quarter documents show where AI demand is landing. High-performance computing reached 66% of revenue and grew 20% quarter over quarter. The important question is whether platform mix, advanced nodes, margin, and capacity all confirm the same story. Start with demand. Revenue reached $40.2 billion, the high end of guidance, up 12% sequentially and 33.7% year over year in US dollars. Net income grew 77.4% in New Taiwan dollars, although investment gains also boosted earnings. The clearest operational signal is platform mix. HPC became 66% of revenue, up from 61% last quarter, and platform revenue grew 20% sequentially. Smartphones were 22% and declined 4%. But HPC also includes CPUs and other computing chips, not only AI accelerators. The second confirmation is process mix. Nodes at 7 nanometers and below produced 77% of wafer revenue. 3 nanometer contributed 30%, 5 nanometer 33%, 7 nanometer 11%, and the new 2 nanometer node appeared at 3%. AI demand is arriving through the most valuable manufacturing layers. Today's economics also improved. Gross margin reached 67.7%, 9.1 percentage points above last year. Management credited cost improvements and higher utilization, partly offset by overseas fabs. That matters. The margin gain is not proof of AI alone. Factory efficiency and process economics contributed too. Then comes the capacity bet. TSMC raised its 2026 capital budget to between $60 and $64 billion. 70 to 80% will fund advanced process technology, while 10 to 20% supports advanced packaging, testing, masks, and other needs. Q2 capex alone was $15.7 billion. But growth has a timing cost. The steep N2 ramp is expected to reduce second-half gross margin by 3 to 4 points. Overseas fabs are another 2 to 3 point early-stage headwind. TSMC guides Q3 gross margin to a 66% midpoint, even as revenue rises. The forward signal remains strong. Q3 revenue guidance is $44.6 to $45.8 billion, about 12% sequential growth at the midpoint. Full year 2026 revenue is now expected to grow slightly above 40% in US dollars. Watch HPC, mix N2 volume and packaging capacity. So, where does AI demand actually show up? In 3 layers moving together: HPC mix, advanced node output, and committed capacity. The limitation is equally important. HPC is broader than AI, and margins reflect utilization, cost, currency, and geography. The thesis is strong because several signals agree, not because one label says AI. Download the source and the visual report below. Open them in PDF AI and ask which figures prove demand, which describe mix, and what must remain true next quarter. Follow PDF AI for the next report.